Hello, Warriors. Good Fed day to everybody. Rejoice, not just because of the Fed, but Colonel Blake Morrow has returned from furlough, and he's back on the front lines, in the trenches with us once again. So Blake is back with us. Stephen Stelios, our AWOL. They're in Greek paradises, and the MPs are out looking for them. So let's take a look at a couple of things. Yesterday, the turnaround Tuesday suggestion was a short cable, and it worked from this candle. This was a face opening. We were here. It was a nice trade. I don't know if anyone took it or how long they rode it. I was only there for 15, 20 pips. So that was the scalp yesterday. You know, the dollar held exactly where it had to hold yesterday, this 94.20. So I could say really with a high degree of conviction that next time we take out 94.20, there's a big break coming in the dollar. But are we going to push up first and make one more new marginal high? My bias is yes, that we will. Which ties into what's happening with the yen. I just had it up there. So we know normally, and gold held up very well with yen strength, yen weakness, U.S. dollar yen strength yesterday to actually, I think, be a bit higher, about $3 higher. But to me, it looks like we're going to, guys, I'm getting all the Skypes here. Push one more time in the yen. So that's risk on, which makes me think that this rally in the S&Ps is going to be a failing rally, but there might be more left. While that's happening, and of course, I don't think the NASDAQ is going to come close to making new highs. That was one that I caught. So looking for rallies to sell in S&Ps and NASDAQ. While that's happening, though, which might be really the hook, because most people, you know, what did the Dow do today? Well, which Dow? The Dow that was here before they replaced almost every stock in the Dow that became an underperformer? Hi, George. Anyway, the Dow could possibly eke out a new high here. All right, so you'll get a new high in the Dow, failing rally in NASDAQ and S&Ps. That's what I'm looking for. And yesterday in the gold, because I'm starting to watch it because of commitment of traders, the setup is extremely bullish in the gold. What's happening in COT, people have been talking about it for weeks. So, and it continues to build. But I would call yesterday, this whippy day, kind of a key range day. So if we could get above yesterday's highs, then I'd say the low is in and we're heading up. And should we take out yesterday's lows, it's about a $15 range yesterday. That would take us, low is about 15, take us to 1200 or a shade lower, which would give us a second divergence. If we had one more wash out there in gold, you could see that there was basically on the 4-hour a little bit of divergence down here. Is sideways. I think the setup of a spike low, something that I'll catch. You know, these kind of patterns where they just begin to base and move sideways like the euro did last year when it was topping between, you know, 23 and 25. There was no spiking action. It just rolled over after a bunch of distribution. So perhaps this is accumulation. You have major net longs, I believe the commercials and the hedge funds have, I think, a record short position here in gold. So if we get continued strength in yen, maybe it'll take it down one more time. And this is a key range day that you could pay attention to for what I think is going to give you market direction. So we're only 25 was the high, so we're only a couple of bucks away from yesterday's high, while we're $8 above yesterday's low. Okay, so those are a few things that I see. Any questions on anything? Okay, we'll get to the Nifty. Hello, Lazaro, Bob. Everyone doing okay? And here's your homework assignment for today, everybody. Go to www.forexanalytix.com, sign up today for the trial. If you don't think you're getting your dollar's worth, I'll bank wire it to you. I'll give you a refund. So, Nareej, I don't think we cover the Nifty in it. We only do it here in FACE, but I believe we provide that analysis. I know Steve always goes to the Nifty, and you want entry and exit levels. You think it's worth it for 10 days. Okay, there's a smart shopper, Sebastian. I think it's worth $500 for 10 days. So if you want to skip the trial, just go right to it and sign up because of this. Okay. I know the website's slick, the technology is cutting edge, but what really makes the company is the people, is the team, is different methodologies of analysis, of having a great chat room, private chat for members only. Joe's in there in the evenings. Amanda is a great moderator. Joe's a very good trader and recently has become regular on Bloomberg. Andre, beautiful charts. This is a reason to join because you all know the markets last longer than FACE all day long. Many turns happen and you don't have to be a slave here. Just load the phone app and go about your day, and the people I just showed you, if they see something, you're going to see it within a minute. Okay, so that's your homework assignment for today. So Blake, I know every time I take, well, I can't remember, but when I used to take vacations, it would take me a day or so to kind of get my sea legs back and get a feel for what's going on. Plus, sometimes you need a vacation from your vacation. And I followed yours, and I was exhausted just watching you go from place to place. Welcome back, buddy. I'm wondering, maybe Blake's not ready yet. You got it. So any questions? I don't have the Nifty up. While we're waiting for Blake, any instruments you want me to take a look at for you, give you my 2 cents here? Natural gas, I don't have that up either. CAD yen, let's see. Everybody, you guys, natural gas I used to follow a lot. Let's see what we have. Here's CAD yen, daily. Okay. I'd be looking for something counter trend if we got back up to 86.20, but the trend is up. It would just be a scalp. But I'd also be a buyer on pullbacks around 85.60 to 40. Hope that helps you. I don't have Tesla up. US dollar yen, something I covered at the beginning. I think there's another push up left in the end here. I was actually going home over the weekend thinking I'd have a chance to buy it down here for a third drive. So I think Rega is bearish this, but I look at the short-term Mo, and again, you know, here's one, here's two. I think there's another move to new highs. I would queue yen sales for when you think the stock index failing rally ends. I could give you a comment on silver. Silver's been holding up a little better than gold, but you know, if the yen had some, it was very inherent strength of how the gold held up, silver held up with dollar strength yesterday. So, you know, pretty good sign. But if the dollar, we get a continuation move and another new high in the dollar, I'd expect one more washout in the silver along with the gold. But it too probably had a key range day, down 4 cents, weaker than gold today. Here's your key range day. You know, okay. So to me, when I look at this RSI, I'd look for one more shot down, maybe 1510-ish, something like that, and try it. Especially here with the daily, I'd like to see one more new low and the RSI stay above 30. Hope that helps. Okay, but the COT data is more constructive in gold than in silver, just to let you know. And I don't have a chart of the gold silver ratio, and I'm not sure where we're at on it, but I know that we held where we had to several weeks ago, where it looked like it was going to break down.
Hey, Coach.
Hey, welcome back, buddy.
Thanks. I had to. It's I'm just trying to get reset over here. It's you know, getting back into the swing of things. You know, we have ADP ADP employment report coming out in just a couple of minutes. How you doing? Thanks for holding down the fort, by the way.
Oh, you're very welcome. You know, we missed you, but we were glad you were out there. I was telling people, you know, rejoice that Colonel Blake Morrow is back in the trenches from his furlough, back in, you know, and that Stephen Stelios are AWOL in a Greek paradise, and the MPs are looking for him. You ever have an MP come look for you?
Hello. I'm here. Hi, guys.
AWOL means something else.
Yeah, no, I never went AWOL.
Okay.
I then considered it at some.
But MPs, you know, bar fight or anything, ever grab you or anything? Those guys?
Nope. No. And we got in plenty of trouble too. So very fortunate. You're gonna have to excuse me for yawning. I got in really late last night, and I'll tell you what. I set my alarm a little later for 4 a.m. Came really early, so really just I got a few hours of sleep. But you know,
I had following your travels. You were like a ping pong ball. Just watching it on Skype, I had to go lay down. It was exhausting. I remember I used to be able to do that. You know, go here, there. Looked like a lot of fun, but you know, just watching it, I got tired.
You know what? My internet. I'm actually having a little bit of an issue. This internet. It's I have to. I think I need to reset everything because but I won't do it yet. Coming through this with the ADP coming out here in one moment. By the way, the market is looking for 186,000. I'll tell you what it is. I just got the dollar yen. 219,000. Good number. No reaction yet. I mean, the dollar yen's not doing anything. Sure. Yeah, let's see the euro dollars.
I think we can safely say that employment in the U.S. is good. I think that's beyond doubt. And you said it before, Blake, you know, it will take a huge number either way to make a difference on these kind of
yeah, at this point, I mean, you know, when you're talking ADP, yeah, I mean, we have to see the numbers really start to slip below 100,000 for it to, you know, to start to make a difference to the downside. I mean, employment just continues to be very strong. Everybody's still, you know, very bullish on the U.S. economy. I don't think there's, you know, despite any trade wars that we're seeing, it's, you know, it hasn't affected employment, none whatsoever, surprisingly. So
just FANG stocks.
What's that? Yeah,
just FANGs.
Yeah, so
the FANGs have they have one good tooth left. Apple reported great earnings.
Apple reported great earnings, and now the market's down, and the market's down because of the additional tariffs that were announced.
Right.
And correct me if I'm wrong, Stelios. I think that was the what happened, because I saw that the Nasdaq gapped up. You know, it was like gapped up like 40 points or something, and then it got slammed back down following that. Go ahead.
It was basically compared to yesterday, where, you know, things seem to be, you know, apparently we're going to resume trade talks between China and the US. That was really good, and, you know, positive risk on. And then apparently today there are rumors that the Trump administration are considering to double the tariffs, or, you know, increase the rates. I don't know exactly what they're going to do, because it's still rumors. But bottom line is, you know, it's still going to be this ping pong back and forth until there's something concrete.
Well, remember that, you know, we're as far as like a timeline of the tariffs go, we are now starting to move forward on the different tariffs that we're implementing. So, you know, and then, you know, it is from what I can read and what I read, and forgive me for being a little bit not on top of everything, because I was just trying to read some stuff this morning. You know, you got one arm of the administration's really starting to push for more, and the other one isn't. And I haven't read in too great a detail, but that's what's really affecting futures. And you know, you look at the stock market. The stock market's come off a little bit the last few days. I mean, the last few days I haven't adjusted my charts except for the euro, and then I decided, well, I'm not going to deal with the charts until I was with you guys, and then I would make some adjustments to my charts other than the euro dollar, because I figured, well, let's do it together, because this way you can see where I was at before I left and kind of where we're at now. But the stock market really has come off the last couple of days, and the Nasdaq in particular, Stelios, that's really been the underperformer of the last few days, hasn't it?
Yeah, and like Dale said, you know, it's driven by the FANGs, who apart from Apple have been pretty dismal, and Twitter as well. You know, you got all the tech stocks that are looking a little bit sick.
No, that hasn't affected the currency market much, and you know, it's interesting when I flipped over to like the euro dollar today. The euro is the only chart I've adjusted of my currency charts since I've been here this morning, because I had to update like the support and resistance levels on ForexAnalytix, which didn't take a lot of work, frankly, because of the consolidation that we're seeing across the board. But if you look at the FX market, the FX market's gone really silent. Now, the dollar yen is really strong, and it's been really strong the last couple of days, despite the weakness in equities. Now, one of the things that I said before I left, and I know I was pretty clear when I said this, is I think you have to, the yen is not going to be the same trade that it was regarding risk on and risk off, and I'm a little hesitant trading the yen pairs right now, because I don't know if they're the right trade should we see risk off in the markets. I don't know if that's the right trade. But you know, the dollar yen's being influenced by other things, right, Stelios? I mean, we're being influenced by yields, which, by the way, you know, the 10-year is almost back at 3%. We've got the U.S. dollar CNH, which is rallying, which is keeping the dollar yen bid, I think. So there's other things that are influencing the dollar yen.
Yeah, I mean, I think for the yen in particular, it's very clear why we've seen this move from yesterday. We had the BOJ, which was unchanged. We said this yesterday on the webinar, but they revised the inflation forecast lower, and essentially looks like they're going to be easing for much longer. So that's what the market didn't like in terms of the yen. That's why dollar yen is ripping. But on the other hand, they did kind of hint that they're not going to be as they're going to be a little bit looser in terms of their targeting for the 10-year yield. So JGB sold off, the yen sold off as well in terms of so dollar yen rallied. So there's a good reason why the yen is a little bit weak since yesterday. Where will it go from now? Is a good question.
Yeah,
but you are right. The whole risk on risk off thing might not be the same as it was for the past few years.
And when I was in Connecticut last week, the yen was strengthening a little bit there because of people were assuming that the BOJ was going to be a little bit more tighter in their rhetoric, looking to maybe tweak bond purchases, but the BOJ is obviously, I guess for all intents and purposes, to squash that for now. So,
yeah.
Right, okay,
yeah, that's right.
So let me go to a couple of pairs that I want to talk about in particular. Is a couple of pairs that I'm actually long, and I got long. I got long the U.S. dollar Mexican peso on Friday when we hit 1855, and I've been meaning to buy the U.S. dollar Mexican peso once it got down here, and I had a bid in at 1855, and I got hit. I bought a little bit more yesterday, and there's a lot of news, and you have the Mexican president who is the Mexican president-elect, who yesterday said he's looking to wrap up NAFTA negotiations here shortly, and the U.S. dollar Mexican peso dropped on that news right there on the hourly, and then we popped right back up, and now I'm thinking that the U.S. dollar Mexican peso, and you could say the U.S. dollar Canadian to a certain extent, but the peso has it really priced in that we are going to be we're going to get this NAFTA negotiation wrapped up soon. So the U.S. dollar Mexican peso, just so just taking a look at the daily chart, I mean, we've come down from 21 21 on the exchange rate down to 1860, 1855, 1850 actually, in a very short period of time, and I think a lot of this is now priced in to the U.S. dollar Mexican peso. Now it had gone down to the level that I wanted to buy it, and this is technically speaking, we had this beautiful Gartley pattern played out perfectly. We've hit support at 1850, and now it is pivoting off the 1850 level, and if we get above 1875, in my opinion, it's going to be a breakout move higher. So I did buy the U.S. dollar Mexican peso late last week. I haven't been in front of the terminal to input anything for ForexAnalytix, but I'll tell you what, the U.S. dollar Mexican peso looks poised to make a move higher, and I'm playing the same way with the U.S. dollar Canadian. Now the U.S. dollar Canadian also, if you guys don't recall, we are, let me get rid of this blue line here, we are basically pivoting off of the broken multi-week trend line that was broken. We've come back down and almost retested it, almost down to a 50% retracement. I mean, we could go down to 129.50, but you can see why the U.S. dollar Mexican peso and the U.S. dollar Canadian are starting to catch a bid down here. They're getting down to levels that we had been expecting them to hit in recent weeks. So here we are, and like I said, I'm starting to play a little bit of a counter trend trade at this point in time. So, Stelios, I know you're currently out of town and you're actually on holiday right now. What are some of the things that you've been looking at, and you too, Dale? Because I still think that gold. I was listening to what you were saying a little bit earlier, Dale, about gold. Gold still is finding a bid down here. What trades have you found as interesting over the last week? Because, like I said, I haven't been in front of the computer much over the last few days. So.
Well, for me, to be honest, the way I look at things, nothing material has changed in the last week. So I still have the same biases that I've had for a while now. I went through some of them yesterday. I still think that sterling should be. I'm on a buy the dip in terms of sterling, not necessarily versus the dollar, but I like to buy sterling against the Kiwi, or I like to sell euro sterling if it gets to 90. So for me, unfortunately, not much has changed in the last week. It's been quite quiet, and I'm waiting for the FOMC today, although I don't think there's going to be much of a surprise. But the main thing for me is Thursday, where we have the Bank of England hiking rates as far as the market's concerned, and also we have the inflation forecasts, the quarterly inflation forecast, which should give us some indication of what Carney and his gang are looking to do. But no, otherwise I'm very, I'm still looking at the same things. I'm still bearish dollar Norway. That's been consolidating sideways for the past few days. And like you said very correctly, precious metals, they seem to be finding some support here, although with the dollar weakening, they should be doing much better. And that scares me a little bit because I'm still long silver and I'm slightly worried about it. But I still think in the medium term it's going to perform very well. But short term, no, I don't know.
Yeah, and the thing that we were talking about, you were talking about silver, and one thing that I guess I need to really point out in gold is that even though we found support down at the 618 and the 50% retracement, there was a multitude of reasons why we found all the support down here, 127% extensions. It's a big confluence, and that's why you can see this. I have drawn out the support zone that you see in gold. The one thing that does worry me about gold is we could not take the 1236 breakdown point. You can see we hit it late last week and then reversed from there, and we failed to really get back above it. And one of the things that that I was telling some of the guys in the Connecticut office was, if we break above 1236, this was last week, I'm like, we've got to be short the dollar and long gold. And then one of the guys in the office was like, well, how about if we don't break? How about if we don't break? What does that really say? And the fact of the matter is gold is weak. And if gold continues to weaken here, that could be maybe a catalyst that drives the dollar higher, because if gold starts to break back below, 1200, we might see some significant downside. I mean, when I say significant downside, I mean we could realistically be trading back down at 1150, 1180, and then what does that do to silver? Because silver is the same issue here. Is we could not get back above the 1560 level, and we're just consolidating. I mean, silver does look weak. Stelios, there's a saying that I've always said in the markets, what does not go up only has one other direction to go, and silver and gold are not bouncing. So if they're not bouncing,
I personally think that Dale said it very correctly yesterday. He said that maybe we need to have one more flush to the downside. There's a lot of stops below 1200 in gold. Maybe we need one more flush because the DSI is still very low. It's like low teens for gold and silver. So maybe we have one more flush below 1200. Maybe we get to 1180, wherever, and then we get a false breakdown from that support, and then we just go up. I don't know. Maybe that's what the market needs.
Yeah, I mean, maybe that is it. So what I thought I'd do really quick is, and by the way, Dale, do you have an interview today? I apologize for my lack of knowledge.
Yeah.
I'm sorry.
Yeah, we have George Habash with us. He's in the room right now.
Okay.
So
great.
Yeah.
Great. So
if we wanted to go early, sure George would be willing to.
No, what I wanted to do is I just wanted to make sure somebody was coming. So therefore, I'm going to take the next half an hour really to go over some of the charts, some of these majors that I haven't adjusted yet, and just go through them. So with the cable, we were just talking about the cable, and Stelios was mentioning about still being bullish, at least the pound against some of the crosses, which makes sense to me. One of the things about the cable right now is you'll notice that we had this drop to new trend lows. Okay, so we hit new trend lows here. Wow, crude's breaking lower a little bit here. We had a break to new trend lows, then we reversed, and that reverse set up a false breakdown a little bit. So you can see right through here, okay, this little false breakdown, right? Now, false breakdowns usually lead to a break in the opposite direction. Now, what we've done is we've come back up to the 618, stopped there mid last week, and now we're just kind of challenging this downtrend line. So I think, if the cable can break above 132, I think that would be a pretty bullish event. 132, 132.10 or whatever this 618 is, I think that's what needs to be broken in order for the pound to look a little bit better. Now, I haven't looked at the euro pound. Frankly, I haven't looked at the euro pound since last week when it was breaking above 89 pence. And I think I looked at a quote, and we're right at 89 pence. So we're just kind of holding it. But the cable, I think one of the things that will help the pound out is if the euro pound starts to slip again. So, and that isn't the case at this moment. But you can see this, I think the cable really has to break above this 132.10 level to really get the bulls engaged again. All right, let's take a look at the Aussie. Now the Aussie is probably the easiest chart that I've looked at recently from a consolidation standpoint, or really knowing the breakout points. You have the 75-cent level, which is, if you guys don't remember, not that, let me move that over for a second. But it's this dotted line that you can see, that's the breakdown point, and that has been holding the Aussie dollar, and it's been containing prices. So as long as we're below 75 cents, it's really hard for me to be bullish. And remember, if we're trying to figure out, well, what happens if there's risk aversion? If we see the market sell off, how do we respond to that? And when I'm looking around at currency pairs, the one thing that I might say, well, I don't know if I want to be long yen, but I'll tell you one thing that I probably want to be short is I want to be short commodity currencies. They are trading heavy. If gold and silver cannot break higher, and we see some risk aversion, then I think the Aussie is a pure short play, especially with the trade dispute, trade war heating up with China. It's still it's obviously a big issue. So the Aussie is really contained in this tight trading range. We have a divergent relative strength. You can see it here. It's been divergent on the daily charts for weeks. But if it's divergent, okay, what that means is it's also resetting. So if we break lower, like I'm just going to use this as an example. Let's say the Aussie starts to break lower, okay, and I'm not sure if it will, but if it does, okay, if the Aussie breaks lower, what could very easily happen is the relative strength could break lower as well, and then it would confirm that we've got a new leg lower happening in the Aussie. The scary thing is when you see this divergence and then price doesn't recover, that means that the RSI is just resetting. So which means we could see some further downside in the Aussie without any turning us off or away from it. So I think the Aussie's trading extremely heavy. Same with the Kiwi. Kiwi's the same way. Now this is probably one of the messier charts, and I haven't messed with this chart recently, but I'm going to go ahead and start deleting stuff because this inverted head and shoulder pattern didn't play out. You can take this away, this red line away, and then what you can probably do here, which makes a little bit more sense for this particular pair. Let's get rid of this. We don't need this anymore. Okay. You can see we have a nice little triangle consolidation in the Kiwi. And as long as the Kiwi stays below this 86, or I'm sorry, 68.50 level, then the risk is still lower. Again, if stocks sell off, commodity currencies, I don't think are going to have a positive response to that. So, you know, the Kiwi could still trade really heavy here. The dollar Canadian, I showed you guys already, and I am long some dollar Canadian. I got long at like 130.30, so I'm actually out of money a little bit. But I've been buying this particular currency pair, and I'm going to get really bullish if we break back above 131. And remember, I think that the NAFTA news has already made its way into the market. So everybody's expecting a positive NAFTA or positive NAFTA negotiations. Canada is a little bit of the risk here, because I think instead of pure NAFTA negotiations, it might be more bilateral between the U.S. and Mexico and U.S. and Canada. That might be one of the reasons why the Canadian currency is maybe it's not acting the exact same as the peso, but I think we have to get above 131 for it to become bullish again. And we could still drop to 129.50, which is also the 50% retracement. It's a retest of this multi-year trend line. I think that's still possible. Swissy, haven't done anything with the dollar Swiss, but it's very, this is probably one of the messier charts and less convincing charts that I've seen in a while. I don't see any reason to be trading the dollar Swiss right now, other than other than if we get if we get above parity again, that might be a play. One of the things that we also have to think about, if there is some risk aversion, hold on one second. Stelios is leaving. He's heading out again. But one of the things about the dollar Swiss is if the dollar Swiss, if we see some risk aversion, does the Swiss franc come back into in vogue, and traders start to buy the Swissy again. You take a look at the peso, as I explained to you guys with the peso. We came exactly down to the place that I wanted to get long, and I did end up buying the U.S. dollar Mexican peso at 18.55 on Friday. I think it was Friday of last week, but we really need to get back above 18.75 for the dollar Mex to turn positive. The one thing that I do really like about the price action here is that the the comments that came from the president-elect in Mexico about wrapping up NAFTA negotiations in the coming days has not had a positive response for the peso. It's actually the peso is basically at the same price. That means that a lot of this is probably priced in. Now, let's take a real quick look at Dale. Are you still here? I'm not sure if you're here or not.
I am, buddy.
Okay, so bonds are extremely weak right now, and bonds, I've been, and just to be perfectly honest, I've been playing the bond market to the long side, this last month over here, and even was playing it long through here, and fortunately, I was not playing it long when it broke down through this trend line right here. Fortunately, I wasn't on the long side of the bond market, but the bond market looks really weak. I mean, it looks very weak. It looks like yields are going higher. Do you have any opinion about what's happening in the bond market?
Yeah, I think that the implication of that red line that it broke was a wedge, which implies a retest of the lows.
This one right here.
Yeah.
Yeah.
And that's also another reason why it's hard for me to get short U.S. dollar yen. But, you know, I'd kind of like to see. I know the yen has moved out of a lot of, you know, correlations, but it's hard for me to want to short U.S. dollar yen when the bonds look negative like this. So,
and you know, one of the things that's scary to me regarding the bond market is, you know, we were just talking about how stocks, or at least I was mentioning it a little bit ago, and you might have stepped away from your mic for a second. The stock market has been a little weaker over the last few days. You see you know, the S&P is, you know, struggling. After
I think that was a high, Blake, on the eclipse Friday, and that we'll get a failing rally, and eventually we're going to break down. The only index that has a shot for a new high, in my opinion, is the Dow. I think the Dow can make a new high. I don't think the S&P will, and I'm pretty certain that the NASDAQ won't. So I think last week was significant, especially in the NASDAQ. You had a key reversal on the weekly, and a false breakout, it looks like, on your work. Yeah.
Yeah, and you know, I look at the NASDAQ, and I look at, you know, the S&P, and I kind of agree with you here, knowing that we're also in the summer months. We could see a pullback at any moment, and it looks like maybe some false breakouts. Why isn't the bond market having a positive response? Or
I've been talking about that. There's been no flight to quality.
There has been. Okay, so that's extremely concerning to me. Yeah. That you know, if the market starts selling bonds, and they start, you know, they're selling bonds, they're selling stocks too. Where is the flight?
Where do you hide?
Where cash. So does that mean that you buy dollars? And they're not buying gold either. So you're not buying gold. You're not buying precious metals. You're not buying the bond market. You're not buying stocks. Where are you hiding? And do you buy the dollar, or is it
90-day T-bills? But I do think there will be a response in gold. You know, not everything happens at once. You know, just like on the battlefield, there are delayed fuses. So, you know, I think that gold will get a bid when we start in earnest decline. That I think S&P's 2600 is viable. So I mean, that's something that I think will fire up gold. And I wouldn't be surprised to see the dollar and gold rally at the same time. We saw the dollar pretty strong yesterday, Blake, and gold didn't give up much. Okay, so that's just the first day I've seen that. Sometimes it takes the process of it going on for a little bit where the gold's not, you know, gold's holding up while the dollar's smoking. And you have to look at the COT setup in gold, and you'll like what you have on now, and even if that entry doesn't work, you'll most likely be looking for another one because it's an extremely bullish COT setup.
Yeah, well, yeah. Let's see what happens here in the precious metal, because I don't like how they're not being responsive. I don't like how the bond market's not being responsive either. You would think the bond market would catch a bid and yields would drop, but instead they're going the opposite direction. And maybe that's one of the things that continues to weigh on the stock market too.
Well, there are times when everything goes down, Blake. Okay, yeah. I mean, you know, it's kind of a deflationary type of thing where people, the only way to make money is just being short something, not being long anything.
Right. Well, let's take a real quick look at the DXY, and this is the dollar index. And the dollar index, you know, Joey had asked about the dollar index too, and I'll tell you what, the dollar index is. I thought we were in a nice little upward sloping channel, and then what happened? You can see right here. What happened is we slipped through some of those technicals last week. This is a daily chart last week, and then we were just holding. So nothing really to write home about in the dollar index, other than, you know, we are just kind of stalling here, or maybe better yet, we're just kind of consolidating in some sort of triangle. and this might be more of just a result of just summer type of trading. But I think while we're above 94, you can't get too bearish the dollar. But at the same time, this little false breakout from 2 weeks ago right over here is a little concerning as well. I don't, even though I'm long some dollars right now, I'm long the dollar Canadian and I'm long the dollar MEX. Those don't really factor into like how I feel with the dollar index. The dollar index is going to be, I'm going to be more influenced trading the euro or the cable or the yen when I'm looking at the dollar index. And right now, there's just not a lot of, there's not a lot to do here. I don't see anything that is provoking me to be long or short at the moment.
Under 94.20 is going to look pretty negative to me, Blake. So, you know,
yeah,
that's
I would agree with that. Right here?
Yeah.
Yeah, I would agree with that. And as long as we're above it, though.
Yeah, we could pop one more time.
Yeah, I mean, this, you know, I don't think you can be really too bearish at the moment. But yeah, you break through this support, and that's gonna look rather ugly. At the same time, you know, if we get back above 95.50, then you know, we're looking at much higher levels from there. So anyway, there's the dollar index, and I want to take a look at the dollar yen. We talked a little bit about it as well. I think the market was getting pretty aggressive with the dollar yen, a couple different directions, and I'll tell you, I got long the dollar yen, or excuse me, I was short the dollar yen. I got stopped out for a loss as we broke above this 111.40 level. Then I turned around and went long. And then I turned around and went short the dollar yen as we drove back towards 111. And frankly, I haven't touched it since I left on my break. So it's been really a week and a half since I've been trading the yen, and I don't know what to do with it right now. I'm not convinced one way or the other about the dollar yen. I think we're still holding above this, you know, multi-year broken trend line, but frankly, I don't have, I don't know what I really would want to do with the dollar yen at this moment. I don't know how it's going to respond with risk on, risk off. It's being pulled in so many different directions, Dale, with yields going higher. The dollar yen's been moving higher. You know, with stocks moving lower, it kind of had a little bit of a negative effect on the yen, on the dollar yen, but it's, you know, it's not holding it down. So I really don't know what to do with the dollar yen at this point. The other yen pairs, you know, the euro yen was a perfect short when we were at the 200-day moving average 2 weeks ago, but we've since recovered quite nicely in the euro yen. Maybe the euro yen's just giving you another opportunity to short it here. You know, as we approach 132, I don't know. And same with the other yen pairs. I think we've seen a nice little bounce back in all the yen pairs. Here's the Aussie yen. Actually, here's the New Zealand yen. The New Zealand yen's, you know, coming back to some to its pretty big downtrend line, which I think that'll be a response area. Canadian yen, 200-day moving average, we're just above it right now. So yeah, I'm not really too sure what to do with those particular pairs. But look at gold and silver. Now, Dale, you had stepped out for a few minutes. You stepped out for a few minutes when Stelios and I were talking about gold and silver here. How do you feel about gold again and silver? Oh, maybe he stepped out again. Okay. So anyway, you can see actually gold's trading near its lows of the day. So we need to be a little bit aware of that. It's approaching its lows here. The thing I don't like about gold is we've got gold moving. It's not breaking higher. And if gold continues to trade heavy, we trade back below 1210. That's just going to give the dollar a nice little lift. Now, really quick, I'm going to take a look at some other markets just to have a quick view, because I know we were looking at the bond market. Let's take a look at bonds. Here is the daily. Now let's get rid of this. Okay, here's yields. Now, this move right here on yields is right back at the 618. And frankly, it looks like yields might, as Dale mentioned, that the bond market might test new lows. The yields look like they're going to retest these highs here. We might move back above 3%. And if yields continue to move up, that's going to be one of the forces that push the dollar higher. And that, again, we could look at the euro dollar. I mean, if the euro dollar breaks below this 116 level, that would be the triangle low. The euro dollar could break lower with the dollar strength as yields continue to move higher, and I think that's one of the risks that we're seeing here with the dollar across the board. So, Dale, I'm going to ask you really quick, what were your thoughts on gold and silver? Because we talked about it a little bit when you stepped away from the mic earlier with Stelios. How do you feel about gold and silver at this point? Because I'm fearful that gold hasn't broken above this 1235 level, and silver hasn't broken above 1560. How do you feel about gold and silver? Because I do think
one more washout.
You think one more washout's coming?
Yeah, I think around, just look at yesterday's range day, I think is important. We take out yesterday's highs, I think we could get a rally, but if we don't, we take out yesterday's low, it's about a $15 range. Subtract $15 from yesterday's low, it's that simple. It takes you down just a shade under 1200. And that would be, I think we'll diverge down there too. So that's what I'm looking for, a shade under 1200.
So
it could go to your 1180 level. That was a target a long time ago, but I'm thinking one more washout. It didn't rally when the dollar was weak and the euro was trying to break out yesterday. So I think one more flush is going to be a buying opportunity.
You know, so this is the same issue that the Aussie has. Gold has a very similar issue. Okay, and if you look at the daily chart, notice that we've had this divergent relative strength, right?
Right.
As we hit new lows. Now, what relative strength has done, and this is the exact same chart as the Aussie, and I'm going to go back to that here in a second, is that because the relative strength is reset and we're back into, you know, not being oversold, and price hasn't responded. So we've had this divergent relative strength. Price has just been consolidating, so relative strength is allowed to reset. If price moves down and pushes into a new low, let's say to 1200, as you were just mentioning, which I think is very reasonable and possibly quite likely, if that happens, then relative strength could break down again through this support and confirm the move lower. And that's what happens when, you know, the Aussie is the exact same situation. We had the Aussie dollar that was, you know, consolidating here. Relative strength has been divergent, but relative strength is also reset. So if the Aussie starts to break down from here, then relative strength is just going to confirm that move. And, you know, I also want to bring to light when you talk about like the Aussie or gold, or, you know, I think there's a lot of people that are bearish the dollar right now, which I don't know if is the appropriate response, especially when you start thinking, okay, where are you going to have that flight to safety? You know, where when people aren't buying bonds, they're not buying stocks, they're not buying precious metals, can they buy the dollar again? And if you look at like the Aussie, for example, okay, and this is a weekly chart, okay, the weekly chart in the Aussie, for all intents and purposes, is broken here. It's broken here. This is a weekly chart, and it's not rallying. So the risk of it continuing to break down at this point in time is, I think, pretty high. You can argue the same thing about the Kiwi too. You know, the Kiwi, we have this, you know, multi-year since the financial crisis, we have this multi-year break, and we're just kind of consolidating on this trend line. I think the Kiwi and the Aussie could really continue to roll over, and I think that if you're looking at the dollar and you're like, well, I don't think the dollar is going any higher. You know, I look at some of these currencies and they look like they could have a continuation move with dollar strength, and then on top of that, you've got the euro dollar that has been consolidating in this triangle here. The euro dollar isn't.
False breakout yesterday, Blake. That's why I chose that. Chose the pound as a turnaround Tuesday short, because I had a hard time wanting to short the euro in case the breakout held during the day. So I think in the euro too, we get one more break. So kind of one more pop in the dollar, one more low in the gold, and new yield highs in 10-year. And failing, that's kind of you know, the jigsaw puzzle to me.
You got yields going up, and don't forget the FOMC today. You got yields going up. You've got precious metals that look weak. You've got quite possibly some risk aversion in the markets. You know, especially after you know, the false breakout on the Nasdaq. You got the S&P that's you know, failing to hit new highs. The Dow that also is really actually underperforming quite a bit. You know, if the stock market rolls over, you know, where else are you going to hide? And the dollar looks like the least dirty shirt in the hamper right now. And I think the risk is that we have some continued dollar strength. And then you take, you know, currencies like the dollar Canadian that could very easily start recovering from here after having a sell-off from 133. You know, I think the dollar looks constructive. I think and if you're out there trying to play the dollar yen as your go-to short with stocks going down, I don't know if that's the right trade either. So I don't know. I wouldn't want to be short the dollar right now. I don't think the dollar is the place to be on the short side, but if you look at the dollar index, if we do break below 94.20, things will change. That picture will change. But for right now, you have to assume that we're not going to break down at this point. So, but Dale, it's nice to be home. And guys, I want to say it is nice to be home with you guys. I'm going to be obviously a little bit more up to speed tomorrow because I got home at 11. I was in bed by 12, and I was up at 4. So, and I'm going to be spending all day today really just kind of reading, getting back up to speed, adjusting my charts, and I'll have my head fully in the game as of tomorrow. You know, today is just kind of like everything's a little fuzzy right now.
Your review was a good tune-up, though. Okay, you know, so you know, it's great to do reviews, isn't it, Blake? Because it also clarifies it for you. So
it does.
It was a great way for you to, you know, get back in the saddle, and great analysis, even on the fly, coming in cold. And everyone's glad you're back.
All right. Well, thanks for having me back. And guys, I want to say, hey, by the way, if you haven't visited Forest Park FX, make sure you do that. I hear that they had you had an interview with Justin yesterday. Is that correct?
Yeah. Justin was on, and I'm getting tweets from people that are looking to open online accounts, so sending them some people, and very good presentation by Justin. you know, his key line is, it's, you know, when you check, when you're with a broker, don't go with any unregulated brokers. The return of capital is more important than the return on capital.
Awesome. That's a great saying. And so make sure you guys, visit Forest Park FX. The best way to get to them is just right through our reimbursement program link, because right at the bottom there's a Skype and email that you can get to them directly. They will answer you, versus trying to navigate other ways through the internet trying to get a hold of them. You just email them. Email them right here, or click over here to their Skype account, and you can get in touch with them immediately. So have a great interview, Dale. Thanks for holding down the fort, and you and the rest of the guys, and have a great day, everyone.
See you tomorrow, buddy.
See you tomorrow. All right, thanks.
Okay, good hunting. And George, I'm now going to make you the presenter, and you're going to have control over our television sets as I look forward to seeing your screen and hearing your voice. Here you go, my trading warrior brother. Drop down menu. See if your mic is on. Huh. I don't see you in here. Waiting. Looks like George left for a minute. Let me see something. Strange. It was around for the whole session. Maybe it was intimidated. Let's see. Okay, guys. I'll wait a minute or two. And let's see, while we're waiting, I guess I could take the screen back. So, if George doesn't come back, just a wrap up for me, and I don't see him. So I'm looking for a failing rally here in NASDAQ, hoping the Fed provides it, maybe up in this range. And we'll see what happens with the Dixie. We all know the line in the sands, 94.20 right here under this low. We should threaten this low. Above this high, we should threaten this high. Looking for the potential of one more washout. Yen's turned higher. Early in the day, I said we should get at least a third drive, so that means these highs will be taken out. Not sure if we're going to take out that 113 level. Maybe not. This should end up being could end up being a failing rally here. So I'm going to time yen sales, US dollar yen sales, with when I think the rally in equities is over. Except the yen may have more of a relationship with treasuries and looking for yields to spike, but could be something here around 1220. I'll be monitoring that, but the cleaner play to me looks like what happened in stock indexes last week. Okay, so George is back now? Okay, George. Okay, George, I just passed you the controls.
Yes, I'm in. Sorry about that, guys. It just, that's the way it works. Whenever you're about to do something, your screen and your computer just acts up. But we're back, we're in, and
who's we? Who's we? Have you cloned yourself?
Did I clone myself?
Yeah, because yeah, I do that too. Well, we think this when it's really I think this.
That's right.
You ever notice that?
There's
so,
few
George,
around.
great to meet you.
Go ahead.
Nice to meet you.
Yeah, same here, Dale. And it was very interesting presentation and analysis of the market. I definitely enjoyed listening to you and Blake. And be honest with you, it's really a great time to be a trader right now with the volatility that we've been seeing.
Yeah, so I'd like to take you back in time a little bit, George, and tell us how it began for you. And then we'll get to...
You want to know about the dream, right?
Well, yeah, I want to know, you know, the road less traveled that you took. Most traders take that kind of road. They have a bit of a maverick gene within them. And a lot of them just looking to get free, and the markets, they look at a vehicle for them to do so. How did it start for you? Did you have mentors, or were there any books? I see you use Renko charts, and I went to your website, very nice looking, and tell us a little bit about your first entree into the business and what you were doing before that.
Absolutely. Thank you for that question. Like many traders that you started in this business, you have that, like you said, you said it very, very well. You have that gene inside of you that says, I want independence, I want financial freedom, and I don't want to ever answer to a boss. That's the gene that it kind of runs in my family. Every one of us in the family, from my dad to my brother to uncles, and they're all self-made business people. So I had that, you know,
entrepreneurial spirit.
Yes, I wanted to do something that's different. You know, a lot of them are in real estate or they're doing their own business, but I wanted something different. And you know, after graduating from college and all that stuff, I was looking for direction. And my dad had a broker. And his broker, you know, just well-dressed guy, came into the office, pitched my dad on this hot new stock. It's called Value Jet, if you know what happened there. So Value Jet ended up crashing in the Everglades in Florida, and my dad lost 80 grand in a matter of weeks. And that got me, you know, in a way angry. I was like, man, I could do better than that, you know? And, you know, like his first pick.
Pretty high bar, huh?
Yeah, exactly. So
blow out 80 grand in 2 weeks.
In 2 weeks.
You know, you could have been even after 2 weeks, and then your dad would have felt like he was up 80.
I'm a hero. I would have been a hero.
Right.
You know?
Great story.
I was like, okay, and I see the anguish, and it's a real story because it really set the family back a couple of years, you know, from our goals of buying a house and doing a lot of things. So it was pretty traumatic. I mean, I'm laughing about it now, but then it was, you know, I could see it in my dad's face where, you know, he's like somebody punched him in the face, in the guts. So I was like, I could do better than that. And I started, you know, working for a brokerage firm as a junior broker initially. And
How do you like cold calling?
Fuck no. Excuse my French here. But
how many dials a day?
I was like, you know, 300 or something like that at a minimum. And they throw the book at you, literally, the phone book. And they say, from A to Z, let's see what you got. And, you know, funny you asked that question because I remember my boss at that point, he had his shoe on my desk. And he goes, if you don't call 300, you're going to get the shoe. So that was my motivational speech for the day, every day.
Yeah.
So immediately I recognized that being a salesman in a brokerage firm was not my niche. That's not what I was meant to do. Okay, so from there, I guess I got lucky, or somebody was looking after me here. I ended up going to Barnes & Noble and pick up an Inc. magazine, and I was flipping through it, and they had a big article about day trading and the lavish style of the day trader, the vacations, the money,
When was this? Pre-2000?
Yeah, 1998.
9? Okay, yeah, 2 years before the bubble popped.
Exactly.
Everyone wanted to be a day trader.
Day trader. I was like, man, this is the answer to all of my problems right here.
Yeah.
So what I did is, not to lengthen this part of the conversation, but I was like, okay, I need money, and I need to know what the hell I'm doing. So I went and gathered some money from friends and family, and opened an account at a local. I live in Dallas, Texas, so there's a local day trading firm called Altec Investments at that time. They had a branch in Dallas, and literally it's a floor full of computers, and people just sit there and trade all day long. And started the journey there. And I thought it's going to be easy. How hard is it going to be? Just buy low, sell high, and you should be okay. Yeah. And quickly you recognize that there's a lot more to trading than what the salesman is selling. So you gotta there's a lot of elements in being successful as a trader that some of it you catch from books and from listening to other people, but a lot of it is experiential. So that
right. So you can't learn experience. I ask this question of almost every guest. How many years did it take you to make some breakthroughs and start to become consistent?
Absolutely, and that's
how many years?
How many years for me? It took a good 8 years.
Okay.
Yeah,
okay,
I mean,
so the average answer is 4, which is at least an undergraduate degree. 8 years would be, you'd have your doctorate, and a lot of people think they could do it sooner, George. And I don't care what profession you end up in, even if you're an electrician or you're a carpenter, you're an apprentice for years, and you're a journeyman for years before you become a master. So why should trading be any different?
Absolutely, and I'll take you to an example. Goldman Sachs will pay about $250,000 to train a trader how to be effective within their own system. So, and it takes multiple years for them to actually mature to become from a junior to somebody that they give a lot of control to. So when it comes to you doing it independently, it's going to require 2 things. One of them is to develop a technical expertise in understanding the mechanics of the market. And be honest with you, that's the easy part. Then the second aspect of it is emotional intelligence.
Good.
Is how do you process the information emotionally? How do you detach yourself from the outcome? This is a process-oriented business where 100% of your focus should be on following a rule-based system that gets you in the market, gets you out of the market, helps you manage the trades, and your emotions needs to detach from it. I feel like trading is a beautiful application of mathematics in a way.
Okay. And easier said than done to get your emotional paradigms under control, isn't it? What was the one thing that you had to work on? I mean, something I still work on is very good at entries, risk management, sometimes not patient enough to ride trades to objectives, targets. And the way I've learned to overcome that is taking partial profits so that at least I'm getting paid and I have something on if it continues to target. Also, being willing to take a loss, which all you have to do is, if you're not willing, you blow up an account or 2 and you learn to become willing to take a loss. So that's my story.
Yes, very well said there. And from my perspective and angle, I learned the art of walking away, and that's
beautiful.
How I felt managing my emotions works most effectively is I have a rule-based system that the only decisions I make is one decision, which is how to enter the market. And the moment I entered the market, the rest of the rules that I have automated within my structure and my system will literally take care of everything else. So I come in there and I look at my entry point. I look at the market condition. First, I have to figure out the structure of the market. What is the market that I'm looking at? Is it a short? Is it a long? Is it a stay away from market? Meaning there's no decision that needs to be made. Once I figure that aspect of it, the next stage comes into play, and that stage is where is my, if it's a long market, where's my entry point?
I love that walk away, George, because you don't change your outcome by staring at it, do you? Now I've tried to teach people how to place a cursor over the candle in a trade they're in and drag it in the direction of where they want the market to go, and even use a magnet, and it doesn't work. So why not walk away if you're emotional? And I think that's a great strategy. And then you automated the rest of it after your entry.
Absolutely.
I will have to, I like that. Okay.
And one thing that you'll notice, I've mentored hundreds of traders over the years, and two things that a struggling trader will do frequently. One of them is they're constantly and obsessively look over their P&L. And every trade they make, they look at how much money they made or how much money they lost. And that automatically raises their emotional engagement in the market, and their blood pressure starts rising. So one of the things I tell people, especially when they're starting off, is trust me on this and not look at your P&L for a whole week, and only look at it at the end of the week on Friday at close of business. And every decision you make, just make on the basis of the rules that we talked about. And you'll be surprised how their mind shifts from being obsessive over P&L to being obsessive over the process of properly trading. And that's just one of the steps.
Basically, trade markets, not money.
Money. That money is a side effect and a consequence of proper trading. But you never make it by looking at money. You make it by looking at your process and making sure that your process is in tune with how the market is behaving. So that's
great mentoring, George. You're natural. So, just because of a little bit of a time constraint, beautiful looking Renko charts. Maybe you could talk to us a little bit about your setups here and why you turned to Renko, although it is Renko, right? But you're keeping the wicks. A lot of people that trade Renko don't keep the wicks. Why did you keep them?
Because it gives you that reversal. So the reversal, for example, here, it's a 12-tick reversal, and that is an important piece of information that I like to know as price progresses. And those tend to be turning points in which I can get in and place my orders. The way your question was initially, why do you use Renko versus time? I feel that from experience of many years, trading is almost connecting two dots in space, and you're really trying to measure movement between those two dots in space. So time tends to be deceptive in that calculation, because you're measuring movement, you're not measuring time. So
W. Gann would argue with you.
I'm sure he would, but
it's very esoteric to grasp it, Gann stuff. But he's one market master who felt time was more important than price. Just bringing up the exception, buddy, not the rule.
Absolutely. And
many ways to skin a cat, aren't there?
Absolutely. And you know, there's a lot of experts in market behavior that there's different angles to look at this problem. It's how effective are you with your vision and with your point of view.
Bingo.
So, absolutely. So when I look at this market right there, I want to measure in a pure fashion movement and movement only. And for example, it doesn't matter to me if it took between 7 o'clock and 7:15 for the price to break out. That time is not significant. I just want to see the movement, and based on that movement, I'm making a decision. So how do I make a decision saying I want to be in, out, or be on the sideway? So I look initially at, in one of the markets, one of my favorite markets that I look at is NQ, crude, and you know, sometimes I look at gold, and I heard you guys do a wonderful analysis on gold. But initially, the first step of the process is looking at the daily and seeing what price structure the market is in. And I can see from looking at this that NASDAQ 100 hit the bottom of the range and the channel, and it's bouncing back. So there's buyers stepping in. But that's just a structural look at the market. We have to dig deeper. So the second aspect of it is looking at the 20 NT wrinkle. And in the 20 NT wrinkle, I'm looking at a couple of things. We developed a swing trade indicator, and those are the lines that you see, T1, T2, T3. And what it does, it gives you an entry point, and it gives you a target based on volatility. So as the market is moving, it calculates based on the behavior of the market, what are the range, and where is a proper entry, where's the stop, and where are the targets. So we use that along with the cloud that you see here as a guide. You want the swing trade indicator along with the cloud to give you the same story, meaning the market is short. So we go from there to a smaller wrinkle value of 12, and you want that story also to be the same. Then once those two are in sync, you come to the 6 NT wrinkle, and you want that story to also be the same, meaning that the market is short on the 20, short on the 12, short on the 6. Whenever you have that environment, what you have in front of you is a structural environment that's long. So all the pictures, there's a synergy and harmony between all the variables that
define the time frame, TFs. Well, they're not time frames, they're amount of candles.
Amount of candles and motion and structure. Right. Okay. So it's measured by the cloud, it's measured by the swing trade indicator, and it's measured by the behavior. So once we have that synergy and harmony between all those three elements, I have an environment where I can look for an entry point, and the entry points come in the form of retracements into the middle of the line. So that would be, for example, I mean, that's not a perfect example here, but it's a retracement to the middle of the range and then an entry point. And the same thing as the price goes, that would be an entry point in which we start managing from there. And we have a very well put together, entry point, and the risk is known, and the targets will be known as well as the price progresses. And then at that point, once the trade is entered, the best thing I could do is I've done my job. I feel like I've done my job. There's nothing else for me to do. So me micromanaging the trade after entry, if you look at the sample of all your trading, it's counterproductive. You always end up doing what opposite to what you should be doing, which is a lot of times you see traders taking profits too early, or stay too late and end up missing on their profit targets. Or the worst case scenario for a newbie is they average in a trade in a martingale approach, trying to break even or make money, and then you see your account blow up after a blow up after a blow up. So to avoid that cycle, a rule-based system is typically the best approach. Define your environment and define one thing, which is your entry, and have a system for your exit, and walk away. It will be the best thing you'll ever do. Walk away.
Do you have any macro view on NASDAQ here? We had that big sell-off with Facebook and everything last week. It's trying to recover. Is your work saying we're going to have a failing rally or a new high?
It's I'll tell you one thing. The big picture is the market. Let me pull that chart up as we talk. Give me a second here. Here we go. Thank you. So that's the big picture. So the big picture here is that move, those two candles that we're seeing here are significant. The overall trajectory of price action is 7,000. You had an inside day yesterday, right, and today we're breaking that end. So you may get a bounce here. That bounce could be to let me see this price here. You're looking at, let me move your thing. Here we go. All right, 73.83. That's an area that you will see a lot of attachment to. But right, within that middle of that range, the 50% of that move is somewhere around 61. Up to that level, you can get a bounce, then the market is going to consolidate and start chopping up in this area and potentially break that channel. Now, okay, I'm always ready and prepared for any eventuality. I don't walk into the market with a
no biases.
No biases. I literally am my research is literally less than 5 minutes every single day, and that's all it is. And then I come in and I turn on my monkey hat, and I'm a monkey. Right. And I sit there, and if everything lines up and it's a long, I take it, and if it's a short, I take it, and if it's neither, I stay away. I view trading in the form of a model, and what I'm showing you right here is the signals that generated last month. There are two forms of signals. One of them called inception trade, which is the beginning of a trend, and the first continuation. That's basically meaning the first test of this new trend. So so everything is basically calculated and counted for in this format. And this is how I know that my edge works or doesn't work over time.
So and what was your hit rate last month? About 60, 70%?
83%.
Okay.
And so out of 50 decisions that were made, and those are, let me see, let me just make sure that I got 51 decisions that was made by the system, 9 of them failed.
Okay.
So you're at 84, and okay, that generated, depending on the model that you take. For example, if you're taking 4-contract model, you're looking at $8,300. You're looking, okay, and 2-contract is less. But the point is, this is the equity curve for 2 contracts for the past 3 months, and every single trade coming in, including up to the 31st yesterday.
Okay, well, what's been your worst? You know, it's great to show the good times. What's your worst drawdown in the last few years?
Few years, I've had a $15,000 drawdown.
Percentage?
Percentage was about 20%.
Okay. So what's your business model, George? Do you sell the software? You looking for subscribers? Why don't you tell us the best way for people that heard you live or are going to watch a recording, the best way to get a hold of you and follow up if they have an interest?
Absolutely. So you could reach us at support@harmonytrading.com, and basically our model is we have developed an environment for traders to come to our chat room and interact with us in a way where we're heavily interested in you becoming a successful trader. I went through the process of learning how how to do this effectively for myself, and I want to, give that knowledge and give that structure to the people who are interested. And I have a love for helping people. I have a love for talking about the markets, and it's just that one of those big passions for me. So you could come in, and I'll give everybody that's listening today a 1-month free trial. So they could come in there and see for a whole month every single trade that the model is producing, and every single trade that we're taking in the room, and make a decision based on that information, real information, how they want to interact with us. They can come and buy the software, which has a mathematical edge to it.
How much is that?
That is $3,000.
Okay.
And then you could come in and be in the room with us without the software and just follow the signals, and that's $250. And there's other programs that we can talk to you about. And the big idea is be in an environment where people are truly interested in helping you. When we take on a student, everything is one-on-one, meaning that I take a student in, it's not going to be, I'm going to give you a bunch of videos for you to look over and learn this. No, I'm going to be with you on the phone. I'm going to take you through every signal and show you how it worked in my account and how it worked in the market. And I'm my vested interest in making you successful. Obviously, the trader has to put a lot of work into it, but I have to, as a mentor, do you right by being there for you. So every day I receive from my traders their trading, every single trade that they make in their account, and I will give them analysis back to them on what I think they ways to tweak it, so this way they can enhance their results. And that's an ongoing process.
Well, I was going to call you my trading warrior brother, but I'll call you my trading warrior monkey. I think that, it's been great meeting you, and very interesting work that you do. And from what I could tell, you're a natural teacher, and wish you and your mentees all the success in the world, George. Thanks for coming in today.
Thank you very much for hosting me. I'm just going to put a link in the room for the room for people that want to take advantage of the offer of a 1 month free. And again, you could reach us at support@harmonytrading.com. Thank you, Dale, for the time, and really glad to meet you.
Okay, George. Good hunting, buddy.
Thank you. Have one.
All right. All right. Okay, everyone, that's a wrap. He posted it right there.
Well, let's see if it came through.
It did.
That right? Okay, yeah. Perfect. Have a good one.
All right, George. Okay, Jacques, everyone else, good hunting. See everyone tomorrow at Harmony Trading, Michael. Thanks again, George. Remember, don't just count your pips, count your blessings. See everyone mañana. Adios.